Hello, welcome to TO Markets Price Action Analysis with me, Jan Mutat, Chief Market Analyst for TO Markets. And yesterday we had again an excellent day. Gold hit our targets and rolled over just as we suggested in our analysis on 25th September. But now we are looking at EURUSD because I can see some dollar strength coming into the markets, and EURUSD is a little weak at a key resistance level. So let's go and see what's in store. What are the likely movements in this market? Before we do that, let me remind you that even though we have constant successes here, we don't provide investment advice. So I would advise you to pause this video and only proceed watching the video if you agree that all the material that we provide is for educational and marketing purposes only. We don't provide investment advice. So if you agree with this, then we can go on and look at the charts. EURUSD has been trending lower for some time. And when it was trading down here, I was suggesting that we are seeing some dollar weakness coming into the market, and this materialized quite soon, and euro rallied higher, gold rallied higher. But now we are trading at a key level. We are, first of all, trading above the sort of regression line here in this channel. The market has rallied against the major trend. The prevailing trend is down, but the market has rallied against it, and it's trading at key resistance level. This resistance here, if we go back a little bit, we can see that it's the August 21st low. This is the low, the same key level that we have been focusing on so many times when the market was trading above this level. Now we have rallied back to it, and as you can see, some selling has come into this market. Market is getting a little weak there. So what other levels we should pay attention to? Why is this so key level? Why is it so important for traders? First of all, we have this ever so important 50% Fibonacci retracement level here. But obviously it depends on which highs you are using to draw your Fibonacci's. So some people might choose this high, some people might choose the high here, and some people might choose this high. Now, whether you choose this or this high, you either get 38.2 or 50% level. So either 38.2 or 50% level come close to this current current key level. I think that's the appropriate way to refer to it. Now, obviously, because we have different people trading these markets, they are looking at different levels. So we have, first of all, a sort of cluster of Fibonacci's here, and we have this recent high which was an attempt. It was formed when the market attempted to move higher but failed. So all these together, I think they form a pretty important range. So I think somewhere from the current price to that reactionary high, there's a high likelihood that this market will roll over. For the new followers of these videos, I'd like to say that I don't know what's going to happen in the future, and I never claim to do that. So all I can do is to have an idea of where the market is getting weak, what signs are we seeing that support this idea, and where are the key levels. So the trend is down, market is trading at the key level, it's showing some signs of weakness, so we have to ask, is it more likely that it keeps on continuing higher, or is it more likely that we move down from here? At the moment, it looks like it's more likely that the market rolls over, and then obviously we need to check what levels are key levels down here. So I'm looking at this. I'm basically seeing a former resistance there at 116.87, and if we go a little bit lower, there is another one at 116.77. So this 1677 to 1687 range is, I think, something that the market participants will pay attention to. And therefore I would say let's place the target 1 there. So if we get a successful short entry inside this range, that's where I'm looking to take either partial or full profits from my trade. And if the market keeps on going lower, I mean, there's obviously different strategies, and if you come to my webinar, I can show you how to do that. Actually, let me give you the address now, because you can register at teomarkets.com/webinars. Let me type it here. Okay, so here's the address for you. Just type into your browser teomarkets.com/webinars, and it will take you to the page where you can register for the webinar. It's not going to be one of those pre-recorded things. It's going to be a live workshop with me. I'm going to be there answering your questions, and hopefully I'll be able to give you a push forward in your trading career. At least I'd love to do that. And this is what I love about my job, that I can help you to become a better trader. But let's go back to this EURUSD chart here. So we talked about market possibly rolling over here when this green box here would be my target 1 if I get a good entry here, and then the target 2, just in case the market goes a little deeper, is somewhere down here. And basically I believe this is the sort of high probability target, and then if the market just keeps on continuing lower, then there's a little bit more money on the table, but then the probabilities of reaching that target are lower. Anyway, there are different styles on trading, and based on the big picture here, it wouldn't be a surprise if the market hit both the targets. But we have to be prepared to see the market moving against us. Even though we do all this analysis, it's still a possibility that something changes and the market moves against us and stops us out. So you need to have a good strategy. Never trade without stops. So that's highly important. You need to be able to trade tomorrow. That's the most important thing. The market will be there tomorrow, but the question is, are you gonna be there tomorrow? Think about it. Are you taking so much risk that you are creating an existential problem for your trading? I wouldn't like you to do that. I would love to see you taking reasonable risks, always trading with stops. And if you need help in this area, come to the webinars. The next webinar is taking place in about 6 days' time. And like I said, I'd love to see you there. So until the next video, stay tuned for more analysis at teomarkets.com/analysis. And if you like what we do, maybe you want to give us thumbs up, and maybe you want to share this with your friends. I would really appreciate that. Thank you.